So look at these two graphs. Can you identify a common pattern? Yes, both are dropping like the Russian ruble. So I think based on any TA chartists out there, they will definitely stay far away from both Alibaba and also Facebook. I, on the other hand, am attracted by all these so-called losted companies which lost their way. In case you haven't noticed, Falling Knife is my middle name. My full name is Tay Falling Knife Chee. Anyway, in this video, I'm going to outline the few key factors that you have to get comfortable with before starting your Facebook position. So Facebook is currently trading at around a $540 billion valuation, and compared to its all-time high, it's down close to 50%. So does this mean that it's 50% undervalued? The short answer is no. It's 50% cheaper from its all-time highs, but it might not mean that Facebook is a buy. So first, let's talk about the positives of Facebook. Facebook is still a massive cash-generating machine that spitted out $40 billion in free cash flow just in the last financial year. So if you were to just do a simple division, at the current $540 billion valuation, they are trading at around 13 to 14 times last 12-month free cash flow. So despite the slowdown in active users, they still have a global footprint of more than 3 billion monthly users worldwide. So we definitely can't expect Facebook to grow indefinitely, right? But I believe that there is still growth potential moving forward. But it wouldn't be that standard 30 or 40% clip that investors are so used to. So right now, it seems like the focus should be for the company to find and grow into the next curve, which seems like the metaverse for now. And on the other hand, they are also finding ways to dial up the profitability knob after consolidating their position. Now, for the next 5 or so minutes, I'm going to outline some key risks that you should be made aware of before investing into Facebook. But I will definitely provide some mitigating factors and my own opinion on why I personally still decided to start a position in this company. So you know what else is a key risk right now? You not smashing the like button, of course. It's simply illegal. So don't let the like button go off so easily. Anyhow, the most important risk here is definitely execution risk. It just boils down to your trust on Mark Zuckerberg and his team. I'm not going to sugarcoat this for you. The execution risk comes in multiple fold. 1. Do you think they'll be able to outmaneuver TikTok in the grander scheme of things? Competitive pressure is real. Diverting attention is also real. Sure, they can shamelessly clone products like Instagram stories to fight off Snapchat and Instagram Reels to attempt to fight off TikTok. But the ultimate decision still lies on the consumers on whether they are willing and able to stay on Facebook's platform. Number 2, with the new Apple's privacy update and also Google joining in the herd to try to beat down Facebook, do you think they are able to find a new way to assess and also evaluate their targeted ad effectiveness? Previously, before this change, Facebook was the preferred advertising platform due to the vast amount of data they harvested from users. Now, we are in the face of some sort of a post-privacy ad attribution model that Mark and his team has to figure out. So I heard this term from somewhere. I'm not the original source, but you get what I mean. Number 3, do you trust Mark Zuckerberg and his team in executing on the metaverse? So after listening to so many different podcasts, videos, and people in the industry ranging from software engineers to product managers speaking about it and speaking about the metaverse in specifics, I do have my fair share of skepticism in Facebook delivering, especially on this metaverse front. Now, we hit the trifecta of execution risks. Let me attempt to quote-unquote downplay some of them, and you be your own judge on whether you're sold on these different theses. So number 1, on the competition from TikTok, I have to give credit where it's due. ByteDance took the world by a storm, it's a fact, and especially when the world was experiencing some sort of global turmoil as a species. So I believe that a majority of us actually benefited from both the entertainment and the social aspect of the app. However, my quote-unquote best argument against TikTok's longevity, as superficial as it sounds, it's a Chinese app. So I have my own reservations of TikTok's ability to essentially conquer the world at the rate and at the influence which Facebook did. Sure, they had a strong track record over the last 3 years. But the origin of the company will probably play an instrumental role in the coming few years. I'm extending my neck by saying this early, but yes, it's something I fundamentally believe will become a challenge in the medium term. On top of that, it's not like Facebook is not aware of the competitive landscape out there right now. It's clear that they are scrambling to find their foothold in this entire landscape today. And I believe that with such competition, will only make them stronger and stickier in time to come after they figure out the kinks and establish themselves in here. So I highly doubt that this is the Yahoo moment of Facebook, as many people or as many bear theses likes to term it. So on the second limb of the trifecta, yes, Facebook essentially got screwed by Apple and Google with the different policy changes. It's a shrewd business decision by Apple and Alphabet, by the way. I'll give it to them. But it's also a good lesson for investors to appreciate the different levels of an economic mode. So some modes are better than others, and clearly having ownership of the entire underlying infrastructure allows Apple and Google to exploit their position and disrupt a fellow competitor's business model from the ground up. That being said, Facebook still has its network effect largely intact. They still retain the social aspect of new media, and billions of users are not going to migrate to a competitor overnight. I would also dare argue that, hey, there are no competitor even coming close to Facebook as a social media platform. So TikTok is different, by the way. So TikTok is an entertainment platform. I don't follow my mom or I don't follow my friends to see them dance on TikTok. I follow quote-unquote content creators just like YouTube. So the issue with this policy update affects the revenue model more than anything else. So the closest company that you can make a comparison with Facebook would be Alphabet, the parent company of Google. So a large part of their revenue is also generated via advertisements. So the distinct difference is probably the nature and the type of adverts. So Google primarily focuses on search ads, while Facebook focuses more on display ads. But not barring the fact that, hey, both companies actually serve cross-functional display and search ads as well. So the concern of Facebook essentially getting by Apple is definitely valid. But I don't think it will be long before Facebook is able to come up with a different model or system to track efficacy of per dollar spent. Let's not forget, they're still a software company at its core. But a huge caveat here, of course, this vote of confidence has to be substantiated by numbers. So Facebook did provide guidance that this Apple privacy change will result in a $10 billion headwind in the near term as they attempt to transition their underlying ad infrastructure. But I believe they might be quoting on the higher end of the spectrum to kind of overstate the impact. So nobody has an answer to this question and only time will tell. But I believe that we can check in again at the end of 2022 to really assess the impact of this new privacy change done by Apple and Google. Lastly, on the third limb of this trifecta, so the cash burn on the metaverse is an extremely tricky situation to make sense of. Personally, I'm not expecting anything substantial to come out from this venture. I might be on the skeptical front, but I believe that's the best way moving forward in order to come up with a valuation. So in the long term though, I'm hopeful that they will be able to enjoy the fruits of such innovation. But at least in this coming decade, I don't think we are going to get anywhere with this. However, one potential mitigating factor would be your trust on Mark Zuckerberg's capital discipline. It's good to explore and open the company's optionality, but it's even more critical to know when to stop, especially being such a humongous company with huge amount of cash flow. So given the track record of Facebook's execution thus far, I think shareholders did enjoy a relatively higher level of ROIC, which is return on invested capital, and ROE, which is return on equity, over the last 10 odd years. And that is attributable to Facebook's capital allocation skill. So that being said, past performance don't represent future performance. So it's still anybody's guess. In short, if I may summarize, if you were to buy Facebook today, you're buying a company that has quote-unquote lost its story and also plagued with many problems in today's context. So the high degree of uncertainty is also contingent and mitigated on your trust on Mark Zuckerberg's team in delivering. So to add in a bonus point to thank you for staying till the end of the video, for those of you who haven't watched the interview between Lex and Mark, I will leave it in the description box down below. This should definitely be the entry ticket into understanding what and how Mark Zuckerberg thinks. So to cover the last point of regulatory risk, especially when Facebook has been a common punching bag for regulators to take a punch at, so I think to Zuckerberg's point on not being able to please everyone, And making any one company decision is going to piss around 50% of its users, especially when we are living in an increasingly polarized world. So to end off the video, I have a Chinese idiom for everyone. 好事不出门，坏事传千里. It essentially means good news are kept as a secret, while bad news or bad conduct will cause a big hoo-ha. So for every 10 good things that Facebook do, it will be inundated by one controversial decision that has no easy solution, by the way, and that will damage and destroy the image of the platform. So it's an inherent problem that plagues social media platforms by and large. And as an investor, only numbers and long-term internal compounding rate matters. So with that, I'll see you in the next video, but more importantly, I'll see you on the moon. Goodbye!